Hello friends, welcome to my channel. In today's video, we'll be talking about 3 popular investment options: shares, bank deposits, and index funds. These are some of the most common ways people grow their money, but they each come with their own risks and benefits. By the end of this video, you'll have a better understanding of which one might be the right fit for you. Let's know it. What are shares? Let's start with shares, also known as stocks. When you buy a share, you're purchasing a small part of a company. If the company does well, the value of your shares can go up, and you can make a profit by selling them later. You might also earn dividends, which are payments that some companies give to shareholders as a reward for owning their stock. Pros: potential for high returns if the company grows. You have partial ownership of the company. Cons: shares can be risky. If the company doesn't perform well, the value of your shares can drop, and you might lose money. The stock market can be unpredictable, and prices fluctuate daily. Who is this for? Shares are good for people who are okay with some risk and are looking for higher long-term returns. They require a little more attention and knowledge about the companies you invest in. Next. What are bank deposits? Let's talk about bank deposits, which include savings accounts and fixed deposits, also known as term deposits. This is when you put your money in a bank and they pay you interest over time for letting them hold your money. Pros: low risk. Your money is safe and insured by the government in most cases. Easy to understand and access. You can withdraw your money whenever you need it, in a savings account. Cons: the returns are usually very low, especially in a low interest rate environment. The interest you earn may not even keep up with inflation, meaning your money could lose purchasing power over time. Fixed deposits might lock your money away for a certain period, meaning you can't access it until the deposit matures. Who is this for? Bank deposits are great for people who want a safe, low-risk way to store their money, like beginners or those saving for short-term goals. However, they are not ideal if you're looking for significant growth. Now, what are index funds? Lastly, let's talk about index funds. These are a type of mutual fund or exchange-traded fund, often called an ETF, that invests in a whole market index, like the Nifty 500. When you invest in an index fund, you're spreading your money across many different companies, which lowers your risk. Pros: diversification. Since an index fund holds shares of many companies, you're less exposed to the risks of any one company performing badly. They generally have lower fees compared to actively managed funds. Historically, index funds have provided steady returns over the long term. Cons: while safer than investing in individual stocks, they're still linked to the market. So if the market drops, so will the value of your fund. You won't get the potentially huge returns that you might get from investing in individual high-growth stocks. Who is this for? Index funds are great for long-term investors who want to grow their money steadily without taking on too much risk. They're good for people who prefer a hands-off investment approach. Which one is right for you? So, which is better? Shares, bank deposits, or index funds? It really depends on your financial goals and how much risk you're comfortable with. If you're looking for safety and stability, bank deposits might be your best option. If you're willing to take on more risk for the chance of higher returns, shares could be a good fit. And if you want to balance risk and reward with a diversified investment, index funds offer a great middle ground. Index. Conclusion: I hope this video helped you to understand the differences between shares, bank deposits, and index funds. If you found this video useful, don't forget to give it a thumbs up and subscribe to my channel for more information on finance and investing. Please note that there may be some inaccuracies in this video, and you should study in detail about each type of investment. Thanks for watching, and I'll see you in the next video. Disclaimer banner. Disclaimer. Please remember that all investments carry risk. Be sure to do your own research or consult with a financial advisor before making any investment decisions. The information in this video is for educational purposes only.